If you're looking at stocks that are going higher and higher, like you can see on the screen here, going up and up and up, you just need to listen to this. At EPSMomentum.com, we have all the analytics for that. Alright, so today we're going to go over the brand new set of statistics that we released at EPSMomentum.com. Really the ability to look at a curve or a stock price as a curve and shape of a curve. So very often we are asked the question, how can I spot stocks that rally, that shoots up, that in configuration where they're flat and all of a sudden they start rallying? And very often, you know, the 5-day change or the 3-day change or the change for the day doesn't do the trick, right? So you want to be able to detect stocks that are topping, bottoming, and then turning around. So how do we do that? We solve that problem with a very powerful set of analytics and statistics that we release at EPSMomentum.com. So here it is. You go to the screener, you're going to price statistics, and here we've created for price, volume, market score, the stock to S&P ratio, and the stock to the sector ratio. 1, 2, 3, 4, 5, 6, 7 different type of new analytics that you can run on these variables. So first you get the first two are the sigma 60 days and the sigma 250 days. So that would be the 3-month sigma, so how many standard deviation the price is in its 3-month history of trading, right? Trading history. So here, if I set a very high number of 1.13, then I will get the max, pretty much the max high prices that you can find in the period. So GSAT, for example, is at the maximum price it has been for the past month, for the past 3 months actually. Okay, same thing for the 250 days. So that's a full year where you have the ability to look at sigma of a full year. You can sort, and then you pick the big one, mRNA, for example. So mRNA is really extremely high up in terms of 1 full year of history. Right, so we had similar statistics already because we have the ability to look at the distance to high 20 days, distance to high 252 days, right? So that is really similar to this. But again, it's a different way of skinning the same cat. Always useful. The second thing is the price ranking. Again, similar goal, you know, finding which level you are from the max. But more importantly, here this is ranking. So everything is ranked from 0 to 1, 1 being the maximum. So if I'm sorting to 0.09 here, I'm going to get the top of the best prices the stock did get in the last year. So if I click on INMD, I'm going to get the best price is pretty much the last day, okay, which is number 1. So again, very powerful, different than the sigma and different than the distance to high. Distance to high is in percentage term. Ranking could be very surprising because it could be flat, but you know, it's a different way of seeing things. And then sigma, it's a third way. Okay, so once we've done those two variables, what we can do is look at probably the most powerful ones, the price slope 10 days, 5 days, and the EPSM slope price. So let's put the 10 days first. What is the price slope? So let me explain. I've prepared a few slides for you so that we can really have a more precise explanation here. So the question is, how do I find stocks that are in that configuration? Meaning going up and then in an exponential way going higher. Or conversely, how do I find stocks that are dropping fast or dropping and turning around and so on? One way of doing this is calculating the direction of the curve. To calculate the direction of the curve, what you need to do is you need to take the regression line and the the slope of the regression line. So the 10-day slope is really the line. You take the regression line, is pretty much, you know, the shape of in between those 2 points. Taking into account all the points, it gives you the regression line, and then you get this little purple curve. And then in orange, you have the 5-day slope. So I'm doing the same thing here, but on a 5-day. That's on a 10-day, that's on a 5-day. So obviously, if the 5-day is has a steeper slope going higher up, you can see that curve drawing an exponential curve, right? So if it has, the 5-day has a lower slope than the 10, then obviously the curve will be, I'll say, topping. So we have several scenarios here. We have actually 6 different scenarios, okay? So one is scenario 1, I want slopes that go upward. So I call it rallying. Scenario 2, I want topping. Scenario 3, I want topping, but then reversing. Scenario 4, I want collapsing. Scenario 5, consolidating, so down and then flat. And 6, rebounding. So every single of these scenarios, then, you know, you get to set up the 10 days, the 5 days, and the EPSM slope a proper way. So the EPSM slope is basically the difference between the 5 and the 10 days. One minus the other. Super simple. So what do we do here? So first there's the positive scenario for the 10 days. So you see the 10 days here, all these are positive. All of these are positive. Why? Because I want the stock to go up overall in the last 10 days, right? So that's easy. And then it's just a subtle setup on the 5-day. Do I want the 5-day to be extremely aggressive and up? Then I want a very strong positive. Or do I want the 5-day to be like flat or barely positive, like weak positive? Then I'm going to get some topping candidate, right? Or I want the 5-day to be actually negative, you know, in this case number 3, negative. In this case, you have a negative angle here in between the 2 lines. The angle is the EPSM slope. So the EPSM slope is positive on case 1 and negative on case 2 and 3, okay? Or I want to play a turnaround. So here I'm betting on stocks that are actually going down, collapsing, consolidating, rebounding. So collapsing will be negative 10-day and an even more negative 1, so strong negative, which give me a negative EPSM slope. Or I want negative, but a slightly positive 5-day slope. So it's kind of consolidating and turning back to a flat curve. And that generates a positive EPSM slope, positive difference between the two. Or I want a scenario where the stock goes down strongly, but then rebounds in the last 5 days very strongly, right? So in this case, I have a positive EPSM slope going higher up. I'm rebounding here, okay? So this should be very useful for you to use. So how do we put that in practice? So very simple. Let's go back to our software here. We have the slope 10 days, the slope 5 days. So first what I need to do is I want stocks that actually go up. Okay. And second off, I want the 5-day to actually go up. But I want the 5-day to go up extremely strongly, you know, stronger than the 10. And then I want the resulting difference, one minus the other, to be positive as well. So I can sort that. So what I'm seeing now is stock like, for example, DoorDash. So DoorDash is not only going up, but in the last 5 days going higher up, like in an exponential fashion, really rallying, right? So that's what you want. So very quickly, by setting up those criteria, I can see stocks that are shooting up, right? So Lululemon really down, shooting up. Yeah, we can run other names here. For example, this one maybe, you know, flat and then shooting up. Okay, so on the second case, what you can do is first have still that positive 10-day going up. The 5-day should be more on the positive on a weak side, so not super positive. But what you want obviously is the 5 days will have less slope than the 10-day. So what you need is you need a negative EPSM slope, right? And then I want some of the negative ones. So let's have a look at, I don't know, for example, ARGen, right? So yeah, Repligen here, really topping. So up, 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 but then flattening out. Okay, so really up and flattening out. So that's a topping. Reversing would be the third case. For reversing this time, you want really negative slope on the 5-day. You still want going up in 10 days, but in the last 5 days, you want the stock to be reversing and going down, right? And you're still expecting a negative overall difference between the two. So what I'm getting here, like names like ISRG. ISRG is up, 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 and all of a sudden reversing, right? Where I'm getting, for example, EQIX, right? So up, 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 and then reversing, okay? So that is easy. Always, you know, taking the 10 days going up overall, and then tweaking the 5 days and tweaking the price slope, all right? So now let's do the last 3 scenarios just to show you again. On the slide, we did those first 3 scenarios. We're going to do the last 3 scenarios. So we're going to draw the 10-year slope being negative and the 5-day being very strongly negative, so really collapsing. That's collapsing, number 4. Consolidating, that's number 5, or then rebounding, number 6, right? So our goal is to have a negative EPSM slope on the first on the scenario 4 and positive 1 after that. Okay, so let's go back to our software. Here we select the 10-day slope down, right? And then the second thing is we select the 5-day down, extremely down, right? And the slope negative. Right, so now I'm gonna have MicroStrategy, for example, really going down and even down further in the last 5 days. Okay, so another example, for example, Google, maybe. There you go. So actually down slightly, but down strong in the last day or two. Okay, Coin. Down overall and down the last 5 days, right? So this is very useful for that. Now we're going to do the second case, which is consolidating. Okay, the stock is going down, but then I wanted to like start to do a base, right? So basing and consolidating. So in this case, I want the 5-day to be slightly positive. Why? Because I want the market to kind of turn around in the last 5 days, right? But I also want the EPSM slope to be positive because that angle will be positive. Okay, so now what I'm getting is stock that are going down in the last 10 days, but actually going up in the last 5 days. And I'm gonna take the biggest difference between those stocks. For example, Zoom. So Zoom, it's been in the last 10 days been down overall, but yes, in the last 5 days, it's been going up, right? We can take another example. UAA, down in the last 10 days, but in the last 5 days, basing and flattening out, okay? Now, what we're gonna do now is we are going to enhance this and have an extremely strong 5 days. So really stock shooting up, higher up. So obviously there's less and less candidate because we're being very stringent on the stock price here. But we can get, for example, Deckers Outdoor really going down in the last 5 days, shooting up. We're gonna have RH, for example, same, going down last 3-4 day, 2-3 days, really going up and shooting up and catching up here. Now let's carry on with all the other analytics, volume, MS, stock to SPY ratio, stock to sector ratio. So those are extremely useful as well. And I'll show you in a second how you can marry them. So here what I'm doing is the following. I want stocks that actually go up. That's the first prerequisite. Second, I want the 5-day to be strong, because something tells me that you want stock that actually shoot up, that are shooting up, that are rallying. And this is what we're getting here. And then positive slope, right? Because you want the 5-day being greater than 10 days. So you want the difference to be positive, right? So that is easy. The second thing I want the volume to be significant. So for example, I want the volume rank for the past 60 days to be greater than average. Average will be about 50, right? So let's say 58, a little bit above average. Okay, and the second thing is I want the volume slope 10-day to be positive. So I want more volume now than before, or at least an increasing volume on the stocks, on the stock here. So for example, Dash here, Dow Dash, what we're getting is we're getting increasing volume in the last 10 days, right? Whereas it was fairly, actually this quarter was with some volume, but increase in volume, see the trend here is up. You get increase in price, that's the 10-day price slope. And then you have the 5-day price slope pushing the thing up, right? So now I'm trying to get something very powerful, which is I have the buy-in from the volume, so I have the market pushing it. I have the 5-day slope really shooting up, the 10-day on a positive slope, and EPSM giving me EPSM slope giving me the best of these, right? So and I can sort and pick the best one. For example, 86. So for example, Wing. Same thing. Look at that. Shooting up, and in the last 5 days even stronger, strong volume, increasing volume here, right? And that's what you want to see. Then we can carry on our analysis, right? So this is volume. I can also do the EPSM slope with a positive volume, right? But now I can do the EPSM slope on the volume if I want. So I want to be really, really stringent. I mean, the risk is to kind of lose some. I mean, it's going to be very stringent on the number of stocks, so we're going to be left out with very little of them. But let's have a go at it. So for example, AMC, well, it's famous for recent volume, right? So see how the volume has been, if you actually take the last 10 days, which is this, volume has been somewhat going up, price has been going up and rallying further up. Okay. Actually, let me put the volume positive here so I get a more clearer candidate on the volume. Let's do, I don't know, Penumbra. So volume shooting up, increasing, price as well, and price shooting up, right? So this is very, very, very powerful. So that's the volume, but now what we want to do is the MS. So the MS is the blue curve here. So it's a standard deviation, sorry, it's a moving average of the ratio of the stock to the SPY. And so it's a sliding moving average, sliding window. So that's why it turns around zero all the time. I mean, it oscillates in between zeros, in and around zero. And so what we're going to do here is we want the MS to be increasing and positive, right? So we want the MS 10-day slope to be positive. So I want the MS positive, right? And remember, we don't want the MS positive, we want the slope to be positive because we still have an EPSM analytics, the ability to set the MS, here. And we can set the MS still below zero if we want, right? So still below zero, but I want it to be positive. I'm gonna have very, very few candidate, but could happen, right? So I can see the MS slightly going up overall in the last 10 days and below zero. But let's remove this one because that's gonna be too stringent. So just positive MS, maybe we make it very positive, maybe we sort on that, right? And then we get ICUI right? And so we get very positive MS here shooting up. We can also have, we can filter by sigma of MS if we want. So that is very powerful. Same thing with the SPY. So here it's the ratio of the stock to the S&P, right? So I want the stock to the S&P ratio to, I want the actual stock beating the S&P over the last 10 days. I want the S&P ratio to increase. So the stock is beating the S&P more and more, right? And so we have BLD, for example, you know, beating the S&P. If we put the S&P on top, we can see it beating it. So yeah, very, very powerful to spot stocks that beat the S&P or stock that beat their own sector, right? So same with the sector here. You'll have very soon a widget that will show you all the different sectors, but here I can say not only beat the S&P but also the sector over the last 10 days and increasing. FSLR here is on fire. It was, you know, plateauing, and now it's breaking out. MS is up. So really, really powerful analytics here. 15, 6, and turning around. All right, so yeah, you can use this. Please let us know if there's any question, but I think with this, it would be very powerful to actually spot the different type of curves or shape of curves you would want on the stock. All right, thank you very much for your time.